Doreen, Ratemo, Head of Affluent Banking at Stanbic Bank Kenya. Welcome to the podcast.
Our tagline at the bank, we usually say ambition meets affluence. So long as you have an ambition, you need to think about wealth management. And it can be something as simple as endowment plans, in the sense that, okay, you know what, I only want to work the next 10 years. So in the next 10 years, how much can I put aside so that after 10 years, I can actually be able to pull out a couple of millions or even a couple of those dollars so that I now start experiencing wealth.
Hi, and welcome to another episode of Make Money, the podcast. I know the title of the podcast is always Make Money, but today we also want to speak to the ultimate goal, which is generating wealth, maintaining wealth, and ensuring whatever we create lives across generations, leaves something behind. And I'm happy to have a guest here who's an expert in the area. I'm just but an observer from the outside. So Doreen Ratemo, Head of Affluent Banking at Stanbic Bank Kenya. Welcome to the podcast.
Thank you, Kepha.
Very great
excited
having
to
you
be here. Yes.
Yeah, so I was just trying to set some context here in terms of wealth management.
Okay.
I think before I ask you to tell us what wealth management is or tell me what wealth management is, I'll make an attempt of, thinking about it. And I think from the intro I made is, you think first is creating the wealth,
yes.
but more so in wealth management is maintaining that wealth. You don't want to make money as the name of the podcast is and then lose it all. You want it to be wealth, last across generations.
Yeah.
And so my belief then is experts like yourself then help us walk through that journey. How will I maintain this wealth? How will I ensure that whatever I have today will see beyond just my lifetime, kids, my grandkids, and even great grandkids would also get to benefit from what I have today. So that's just an attempt from me. I don't know whether it's a concept. I really don't know what to call wealth management, but you're the expert. I'll let you go. Tell me about wealth management now.
Thank you, Kepha.
Yeah.
I think you've given it very good context, because if you look at wealth management, it's more broader than investment services. I think sometimes people confuse the two. When you're looking about investment services or just doing investments, is where you have an income or you have some wealth that you're looking to grow, and the only focus there is how do I grow it. But now when you're talking about wealth is when the scale of your income has increased, and you actually have more complex investment needs, you have more complex financial objectives, and you're looking at how then do I manage that, to the point around how do I move it to the next generation. I think there's a concept around you are successful if your wealth moves into 4 generations after you. So how then are you able to do that? And also at the same time, how do you protect that which you have been growing? So you're absolutely correct. Wealth management is much, much wider than investment services, as you would say it. Yes. Yeah.
And speaking to who then becomes the target of wealth management, you get a lot of these questions, especially when you throw around the words wealth, affluent banking. People tend to fret, I don't think I'm as rich. Maybe I'm not the target. Maybe we would explain. I know the target wealth management and your client is quite expensive.
Yes.
But on average, when should I start thinking? I've learned to invest, like you say. I've learned about the various investments.
Yeah.
But I want it more complex. I want it more, to insure myself. I need a certain return, some exposure in foreign currency. You get the mix of all those products. But we always fret about what income then becomes sufficient to be, okay, I can be a wealth management client. I can look into these services. Is there ever a marker of this?
It's a combination of two. Okay, so if you look at it from a global perspective contextually, they would say the minute your income starts touching $250,000 going forward, or even $1 million going forward. But most people say you need to start thinking about wealth management the minute you start having investable assets of $250,000. I use dollars because dollar is more of like the globally recognized currency as the standard. But then again, also there's a whole element around sometimes you don't have the entire $1 million, or even let's just say using a global perspective, $250,000, but your income on a monthly basis or an annual basis is significant. So you're able to take care of your own needs and you have excess. So you need to start thinking around how do I manage this excessive income? And sometimes there's another nuance around I have so many financial objectives. I think we were having a conversation earlier around retirement. So I want to make sure I'm planning for my retirement. I want to make sure that I'm putting a plan in place, education for my children. I want to do a bit of philanthropic work. I also want to do a bit of investment in some of small structured companies. So then you bring in a whole conversation around wealth management. So it's a mixture of both the numbers, like we are kind of talking about, but also the objectives around that.
Yeah.
So who qualifies? So long as you have an ambition, you need to think about wealth management, you need to think about investments. And that's why, back to your point earlier, we do have a wide spectrum of customers that we do take care of. Starting off with those who have the ambition, and we kind of guide them. How then are you able to build on that ambition and even the little income that you already have to move to the next level? And then now we have those customers who are already very wealthy, and they're just trying to navigate the complexities around investments, the complexities around the macros, the Kenyan macros, and where do I invest, the various currencies you're talking about. And then that's when we bring in a whole nuance around diversification in terms of how you use that to protect your wealth.
So in terms of battling any misconception around it, you mentioned quite some big figures, $1 million, $250,000. We do get, on a global scale, once you mention dollars, then it's easy to equate. But for someone starting out, is the ambition then, should it be the driver, when you're at a lower base, perhaps the figures you mentioned are in Kenya shilling terms, and you want to grow from there, you only have a few millions maybe to manage, or you dream big, like you say, the ambition is there. Then should the ambition then address some of the threat we get to see, the moment you start dropping the names, as I told you, Affluent Banking, you're speaking of $1 million, and then whatnot. People tend to fret, but I'm wondering whether that ambition then is what can bring in, those who are more aspirational at the moment, but they are looking forward and they have a trajectory to a time where you would actually have some wealth to manage.
Okay. Yeah, that's a very good. It's a very good question, perspective, Kepha, because our tagline at the bank, we usually say ambition meets affluence. So when you have ambition, you're actually looking in terms of how can I move from where I am into wealth. And the minute you actually have the ambition, you are open to actually have the conversation around, then what do I need to do given where I am right now? So conversations around how much of your income can you be able to put aside so that we can now start speaking investment, so that we can take you and push you towards the target. That's one. And then number two is probably sometimes you might not have the income, but what structures, what products do we then have to make sure that you're actually building wealth? And that's when we bring in elements around insurance. We bring in around retirement annuities. I think you were speaking about retirement. So even if you're not touching the kind of incomes we are looking at, what kind of conversations then can you have so that you're actually able to start planning for retirement? And it's something that can be very comfortable from a payment perspective. And it can be something as simple as endowment plans, in the sense that, okay, you know what, I only want to work the next 10 years. So in the next 10 years, how much can I put aside so that after 10 years, I can actually be able to pull out a couple of millions or even a couple of those dollars so that I now start experiencing wealth. And we're actually able to have those conversations and structure that. Yes.
I think next I want to move to challenges of managing wealth. A lot of people just struggle with the part of creating wealth, and we tend to only think about that, You tend to think in your head, if I hit 10 million or if I hit 20 million, then I'll be okay for the long term. But there are always challenges to managing wealth, and I would like you to speak to it.
Thank you. I like that question. And let's just pick the example you said. Someone is saying, you know what, she mentioned $250,000. That's 25 million. You said 20 million. So if I get 25 million, I'm okay.
You're good.
You're good. But what factors do you need to consider? I've come to realize that a lot, especially the Kenyan market, there's a lot of potential to create wealth. And we've seen the data and the statistics which are coming through as saying, from an Africa perspective, even from a country perspective, we are viewed as a growth country, meaning there's a lot of potential for wealth growing. And as a country, we are very resilient. So we are seeing a lot of Kenyans actually coming up in terms of creating wealth. So I've targeted the 25 million and I hit it. Then what immediately becomes my objective? You need to look at certain things, and the challenges is inflation. How quickly is inflation rate? Inflation, basically what it does, it erodes the value of your money. So how do you bring in the time value of money? So one of the things we always say from an investment perspective is your wealth or your investment needs to grow faster than the rate of inflation. So what investment tools or what investment instruments are you looking at so that can make sure that you're beating inflation? That's one. You also need to look at the macroeconomic environment, we've seen some challenges. You see the regulator coming in with various tax incentives or various tax initiatives, which could potentially erode. Let me go back to that figure of 25 million.
Yeah, 25 million.
So what kind of conversations are you having with yourself, with the people who are looking after your money to make sure that you've cushioned that? And then let's just look at some of the risks that are already existing in the market. I think one of the concerns and challenges the wealthy are facing is concerns around fraud. There's a lot of risk there. There's concerns around social engineering, people trying and attempting to get into your wealth. There are also concerns around how do I make sure that this wealth moves to the next generation, because no one lives forever, and I think we're actually having that conversation. So it's to be able to build structures that can be able to protect that. So number one, making sure that that wealth is growing faster. And then also based on your objective, what are your plans around it, is to make sure then, how am I cushioning myself to make sure that I meet those objectives? And then also at the same time is making sure that that wealth can actually move on to the next generation. I think we've seen cases where so much money is moving to unclaimed assets, and it's quite disappointing because someone has worked really, really hard, and then you actually see that money going back to unclaimed assets because people are not aware that you have that wealth and you've not been able to transfer it to the next generation.
Then it's not a slam dunk in a sense, just getting to that point.
Yeah. And even after you've reached that 25 million mark, I think one of the things we've always known is ambition keeps growing. So then how are you moving that 25 million? It could be your goal. Then how do you now move to scale that and leverage that so that you can be able to grow more? Because the minute you have 25 million, trust me, the next thing you want is, okay, let me go for that 100 million. And when you have the 100 million, you're like, let me go for that 500 million. And nothing stops you from doing that. And also, if you look at the 25 million, for example, how have you been able to diversify that so that you're actually able to kind of manage some of the dynamics which will come through from a fraud perspective, even from a macro perspective? So you bring in conversations around diversification. So you diversify not just the asset class, you also diversify in terms of currency. Maybe my objective is I want my kids to go to school in the UK or in the US. And then also at the same time to diversify in terms, I want something in property, I want something in easy, accessible liquidity. So creating that balance, because sometimes you realize someone would actually have the net worth of that 25 million, but they're not able to write a check. Why? Because that 25 million is in the form of a plot. So you get it and you've gone and you've bought a plot or you've bought a house. But now when you need it, you kind of have tied it up because that's not easily moved into a liquid base where you can actually be able to make it easily accessible. So it's a delicate balance, but then it's also a very interesting balance. I always say when you're dealing with wealth, those are good problems, as opposed to
always, when you don't have
always
anything.
Good challenges. But I think the main point here is anyone can be able to scale that. And for example, if someone out there has that 25 million as an ambition, and you're like, okay, let me put together a plan so that I can be able to do that in 5 ways. We can be able to have that conversation with you and tell you, okay, so this is how much you're getting on a monthly, quarterly, or annual basis. These are some of the various instruments available to you, as well as these are some of the various insurances which are available to you to make sure that we take you towards that goal. And then after you achieve that goal, then what else are we able to do to help you scale and actually move to the next level? But the opportunities to grow wealth are immense. And also when you're dealing with an expert financial advisor, I think one of the things that people don't realize is there are experts who are out there whose main role from 8 to 5 every single day Kepha is actually to look at the markets, to see what's happening across the globe, to know where things are actually happening, where they are not happening, who can be able to help you navigate these conversations. There are people who studied these kind of things and they're actually able to assist you. The advantage of banking is that expertise actually comes to you at no additional costs outside of the offering that you're already getting from the bank. And I think we were actually having that conversation with you earlier. It's no longer just about coming and borrowing. It's about what are your objectives and how can I get you there as a financial partner.
Are Kenyans and your clients beginning to appreciate that they could be more from banks? Because we always think account opening, putting your money in the bank, a fixed deposit account at best, maybe credit when you need it, and we tend to leave it at that.
Absolutely. And it's a very interesting trend we're actually seeing coming up, because The market demands it. If you look at some of the research which is coming through, Kenya is actually becoming one of the countries where we are seeing the fastest growing millionaires coming up. You're looking at the income trends in Kenya, it's actually growing quite significantly. So automatically, from a banking perspective, we see the need to be able to address that. So you're seeing a lot of that expertise coming through. And we actually spend a lot of investment, not just in training our people, but in actually doing research that can be able to support our clients, and also just some of the decisions which are being made to support our customers in terms of growth. And it's very interesting. So the uprise of private banking, I think these days you drive by, you see a billboard here, you see, so there's a lot of private banking services coming through. The other trend that we're picking up is millennials are now stepping into the wealth space. So, and they're bringing in a very interesting nuance around technology and some of the other alternative investments which are usually available out there. So how then as a bank can we come in to be able to support them and give them some of that expertise to manage that, to create a bit of balance even as you're navigating that space. So yeah, definitely from an Africa perspective, even from a Kenya perspective, we are seeing that trend coming through significantly, and it is actually driven by demand, not just by guesswork. It's actually, you're seeing the demand is there, and it is just to let people know that these days banking is much more than just the traditional banking of just coming through. We're also seeing a nuance around Kenyans, especially the ones who are stepping into wealth, wanting to be supported from a lifestyle perspective. So you see banks coming in and saying, you know what, we can also support you from a lifestyle perspective with some of the propositions that we do have.
How do you still embrace these alternative investment classes? Like you said, multi-currency. You're even looking at, through yourselves as Stanbic, you can have access to global markets in a sense.
Yes.
But you'll find once I have 25 million, the conversation is very different to when you found me at 2.5 million or just $1 million shillings or even less than that. How does one as a wealthy person still embrace diversity? And, as much as I always say risk, you calculate the risk, take calculated risk. You're not just saying gamble and, try push your 25 million to 250 million. But how do we still embrace the need for that diversification, even as much as we know our goal now is almost capital preservation at this point?
Okay. It's a very good question, and it boils down to two things. First of all, as an individual, what's your objective? And then number two, what is your risk profile? So now what is interesting in our line of work is we come across all. So one of the things that we do have tools in place where we can sit down and say, you know what, Kepha, you have 25 million shillings right now, and you're looking to invest. So if your objective is, I want to grow it, or my objective is I want to preserve it. So those are two different objectives. Or I want to be able to do both, grow some and preserve some. So we first start off by gauging what's your risk profile. Now, what is interesting is we have a mix of Kenyans, and some will say, you know what, I don't want to take risks. I want to go moderate. Now, from the investment side, it becomes an interesting conversation, because if you are moderate, for example, who is kind of balanced and I want to just take a moderate kind of risk, we do have instruments that can be able to support that. And at the same time, making sure that your money is not eroding, in the sense that you're beating inflation and you're experiencing some type of growth. And from the onset, we manage expectations and tell you, you know what, as a moderate investor, these are the type of returns that you're expecting. Are you comfortable? So sometimes you come across a moderate investor is like, no, I want my 25 million to become 100 million. But then at the same time, their risk profile does not support that. So it's just to have a conversation and actually help them to understand that if you want to move from here to about 250 million, you need to move into a more aggressive kind of investments. And then we go into what you're talking about, alternative investments or outside of some of the traditional investment instruments. Now, sometimes you find someone who is actually very aggressive and they're like, you know what, I'm not even happy with those rates you're giving me from a fixed deposit perspective. And the Kenyan market, we are lucky because we are generally a high interest rate environment. But you see them going now into hedge funds. They're like, okay, let me go and get a little bit more aggressive because you know what, I have the appetite. well, what, I'm a bit younger, I can be able to take more risks. So we actually able to help you navigate that. But at the back of that, the one thing that we always advise our customers is you must diversify, because when you come into diversification, it helps you to neutralize all that, so that you actually not be able to kind of experience significant losses when some of the areas where you have invested, that area is actually hit by some of the risk concerns that we could have. So diversification is actually general. You could choose to diversify combining from a currency perspective, especially if you have foreign currency needs and you have foreign currency objectives. How then do we help you to diversify, combining both foreign currency needs as well as Kenya shilling needs? Because even as you have the 25 million, back to our magic figure, you still have daily needs that you need to take care of. You still have expectations from family, even from a business perspective, that you need to take care of. So being able to structure that diversification, diversification, and I like that you mentioned it, can be geographical. If you look at us from a Standard Bank Group perspective, Stanbic is part of the Standard Bank Group. We are actually active in terms of helping our customers invest in some jurisdictions which are very tax neutral, some jurisdictions where the finance environment is actually very stable. So the customer is actually able to diversify geographically. But now, of course, that's when we're talking about more significant amounts. So we bring in our offshore elements around how then do we help our customers around tax optimization, even as you're experiencing significant growth for yourself and even as a business. Yes.
So in terms of factors to drive you into, what to consider when diversifying, your asset allocation, in a sense. Needs is the top one, like you said. I think you had given the example about, you want your children to one day, study in the UK, study in the US. So that would mean some British pound here, a bit of dollar investments there, just to take care of that need. What other factors drive these diversification need? What's there else to look at?
Okay, so if I can just move it more into the wealth management space, away from investment services, is around trying to probably figure out how do I move the wealth that I have built to the next generation. So now we're bringing in intergenerational wealth transfer. So for you to be able to successfully transfer wealth from one generation to the next without dissolving that wealth, you need to look at certain structures that can be able to protect that wealth. So you get to a point where sometimes someone will actually believe, and you're a wealthy person, you actually believe, you know what, all I need to have in place is a will. But the only way to actually transfer wealth without dissolving that wealth is through a trust. So you look at what trust opportunities are available for me now in Kenya. And you find, okay, this is what is, because those opportunities do exist. But now, depending on your objective and also depending on how big your wealth is and how maybe outside of the country your wealth is distributed, you might want to look outside and say, okay, so where else can I be able to build a trust structure, both from a family perspective and allow me to bring in from a business perspective, because we've seen a lot of wealth is actually built through business, so that I can be able to transfer that wealth to the next generation. So you find now the diversification in the form of geographies actually comes in. And sometimes you're also looking at the legislative or the regulatory environment. One of the things we always tell our customers, the best way to navigate some of the regulatory complexities or usually come with building wealth, because you see a lot of that coming through across the nations, not just in Kenya, is then having a conversation around how then do I navigate this. The first step is, first of all, to actually correctly interpret that and actually get the customers to actually comply. So we are telling them, this is how you comply to this new tax regulation, or this is how you comply to this regulatory environment. And then we can be able to bring in nuance around what other geographies are available to you, because Kenya does have international agreements with some of these other countries, so that we can be able to create some diversification for you, even as you preserve and grow your wealth. Yes,
Another aspect I like that you brought it, and this is a conversation we were having just before we began the current conversation around intergenerational wealth. It's something we've really struggled with. There's first, even before talking about structuring, it's something we've really struggled with. And I think, again, my observations here is, you have some wealthy people, or most of us, we tend to think we live forever. That's not happening. And so we never make those plans that, we think I'm wealthy, I'll be wealthy, I will, die rich in a sense, or you'll die rich, but you don't think about that, Of course, you're not creating all this wealth to have it destroyed. You're not trying to sit on 25 million to have it gone. The moment you're 6 foot under, that's never the goal. But what perhaps are some of the hindrances, and how are we going about breaking down that mentality that we see? I think the example you'll get mostly in Kenya is around Asian families, and how we have seen intergeneration. My grandfather started this business, my father took over it, now it's my time, I'm training my son. So there's that continuity in mind. While from an African perspective, and more so ourselves as Kenyans, sometimes we tend to struggle with that, planning after. It becomes quite a difficult conversation. I don't know how you have this conversation with your clients, like, hey, you have 25 million, we've sat with you through, we've grown this, doubled it to 50 million, but you still now have to start thinking of what comes next after you're gone. Where will your wealth go? In terms of navigating that, how you navigating that, if you'd give an experience of how you've navigated, ensuring that this point is hammered home.
Yeah. It's just building advisory, and even in terms of approach. When you change your approach in your engagement with your customers to actually try and find out what are your plans, what are your objectives, what kind of wealth are you managing, what's your plan into getting this to the next generation. And we've seen a lot of the challenges that our wealthy clients are facing is, fine, I've spent so much time and effort building this amazing business, and then the thing about business is because it's also providing employment to another group of people, so there's a lot of responsibility which comes with that. And then now I want to move this to my son or to my daughter, but my son or daughter is not interested. They want to become a musician or an artist. So that in comes the first challenge. How do I move this to the next generation, and what kind of advisory work do we do that? And then sometimes there's this saying which usually says, and I think it's the Dubai Sheikh who usually says, strong men build weak men, because the strong men now create wealth and create a very easy life for the next generation.
And people ease off, and then you create the weak men. Then the weak men create hard times.
Thank you.
Then you have to create strong men again,
Absolutely.
And the cycle comes again.
And the cycle becomes again. So the wealth just becomes kind of get lost. And it's very painful to watch, especially for those who are actually aspiring to step into wealth. So how are we assisting our clients? We do have structures in place to support our clients, because we do have what we call Financial Fitness Academy. We do have legacy planning tools, and part of those is around how then are we preparing the next generation to be able to handle the wealth that you're transferring to them. I love the example you've used around the Asian community, and we're also seeing it a lot also with some of our fellow citizens, the Kenyans, and whereby they're starting to introduce family values around money, family values around hard work, family values around how do you manage people who you're seeing in your father's business. So you're involving your children from a very early age. One of the other families, very wealthy families that we've had the pleasure of engaging with, and actually pleasure of banking with, from the onset, even as the kids were growing up, and even as in terms of how they were structuring their education, they already knew that, you know what, I've gone abroad to study, but this is the plan. I'm coming back to take over. Now, the advantage about us as Africans is we have many children. So sometimes you'll find those ones who are not interested, but you'll always find someone who's interested. So you pick that kind of like a matron who is going to be, we call them a jockey. This is the jockey, and you kind of prepare them to kind of take that over. But making sure that the next generation is actually financially literally, so that they can be able to take on the responsibility of wealth. Because wealth comes with a lot of responsibilities. That's one. The other thing I've spoken about is building structures. We sensitize our customers and tell them, Kepha, you as an individual, you're a separate entity from your business. Yeah. So we see a lot of people mixing their business and
or thinking they're their business. A lot of people think that.
Yeah. Or you see today you've been blessed and you own a couple of commercial buildings here at CBD and they're all under your name.
Yeah.
You don't realize that, you know what, I need to manage this under a separate entity.
A holding company in a sense.
Exactly.
Some sort of.
Yes, yeah. So taking advantage of some of the structures which are existing. And Kenya, I think we have the advantage where our compliance and our Company Act is very clear. Our Income Tax Act is also very clear, and the distinction between the individual and the company is very clear. So you're protecting yourself as an individual, and you're also protecting your assets from a holding company perspective. So educating our customers and telling them, set up those different structures. And now when it comes to transferring that wealth, you have to realize there's the element around family. So what family structures do you have in place? So you can have family trust. And then what corporate structures do I have in place? So you can do corporate trusts. Now, what we've also seen a lot, which is happening, and Kenyans are very hardworking. You find someone who, as they're running their business, they didn't expect at any point in time their businesses would do so well. So all of a sudden, they've come into a lot of money.
Yeah.
So you don't have the expertise in terms of how do I manage that. So we also come and advise you because like we said, we are the experts. We understand the market. So we can step in and tell you this is how you do it. But some of the other things that we tell you is, you know what, it's time to set up a board. Make sure the board has the various expertise that you need for your business. And I think one of the family businesses we were talking about, I think they didn't realize that they could actually be very successful, but they realized, you know what, we don't have the expertise and knowledge to run this. So inviting external expertise through having a board, through having some of the local expertise which is existing here with a bit of an offshore and international nuance being added into it, you're able to actually set up structures which can invite that to help you navigate that. And it's very interesting. Like I said, it's a good story, but then it can also be a really sad story if it's not well managed.
Yeah.
And then there's a lot of risk. People don't realize the importance of separating family from business. It's because, you know, when it comes with family, Kepha, you have sons, they will intermarry. You have daughters, they will intermarry.
Yeah.
So some of the other elements which come through, the complexities around wealth which comes through, is around how then are we structuring marriage, how are we structuring divorce, because we've seen cases where divorce can split estates into two. Yeah. So those structures are very important, and actually having someone who can probably add a lens around that and tell you, you know what, when you step here, we need to separate family, and when we step here, we need to separate business. And like I said earlier, one of the only ways in which you can protect and preserve wealth is through setting up trust structures. It's one of the only ways in where your wealth will not dissolve. Simply doing a will at this point in time, especially if you're dealing with significant wealth, is not enough.
I think we've seen a lot of wills disputed anyway, and they drag on for years in the courts.
And then if you look at the legacy, and I like the term legacy because it's all-encompassing. It means if, for example, Kepha, you have built a business and you are employing 100, 200 people, even 50 people, those are 50 lives in your hands. Those lives should not stop being able to support themselves and their families simply because you have passed on.
Yeah.
How then are you continuing with that legacy, or if better, even expanding that legacy? Because one of the things we do know is the biggest part of Kenyan workforce is actually through private businesses. So then this private business is actually owned by people, and these are the people who we are speaking about from a wealth perspective. How do we make sure that we are protecting that? So it's just much more than just an individual conversation. It becomes an economic conversation if you look at it from that perspective, and it becomes a very critical conversation for us to have.
In terms of some of the common pitfalls you see around, trying to get, the legacy going and building generational wealth, what are some of the common pitfalls you might see? I think I'll begin with the first one. The first one is not planning, most definitely. I mean, the moment you don't plan, then, there's always the saying, not planning, is just planning to fail, basically. So if outside of planning, are there other pitfalls that one is likely to confront? You want your wealth to last for several generations at least. Are there other pitfalls that come along the way to planning that? Like you said, it's a lot of complexities. You mentioned family. There's a lot of, we tend to be very cordial as families. We don't really want to talk about money. While, we are professionals in various settings. You go to work, you earn your money. You take one bill or the other, someone else takes the other, and the household is well taken care of, but we don't speak beyond that. We don't speak of the assets we have or the assets we want to own. So that's one of the bits I would see, the family complexities. We really don't want to talk about money, it's family time. It's family time, keep that on the 9 to 5 side of things. And, this is family. I would speak to those pitfalls, outside of planning. What are the other challenges that one might encounter when you're trying to make your wealth last?
And I know we've kind of gone back to this over and over, but it's significant. I think failure to diversify.
Yeah.
So you end up with the concentration risk. And again, the same example we used earlier. You could actually be owning several buildings or several houses, but what happens then if there's a real estate crash?
Yeah.
We've seen that happening in some of the markets. So all your wealth kind of dissolves there. So diversification is a big key. And I think we spoke about the various ways in which you can be able to diversify. And then the other thing is education. Just keep having engagements around what family values are you running yourself and the family through. What kind of values are you integrating into your business to allow that business to be able to move into the next generation and even be managed at that level. And then the good thing about the world today is if you don't know, guess what? Information is available. Through the banking system, I think we're talking about family business. We have a lot of investment experts who are coming. We have wealth managers flying in from outside of the country, coming into Kenya and saying, you know what, let's help some of these families and even some of these people have these conversations around. So if you don't have the expertise, that's no longer an issue, because it used to be a challenge. That's no longer an issue. The other challenge that we're actually seeing coming up is around technology. As you move from one generation to the next, you're seeing a lot of use around technology. So it's both an advantage and also a concern, especially for the older generation as they move wealth to the next generation. And then you realize, for example, the older generation will be the baby boomers. Now they're trying to move their wealth into the millennials, who have a completely different concept, and then trying to move that into the Gen Z. So trying to just bring those values together, even as the various generations are involved in the wealth, it becomes a very interesting conversation. But what is encouraging is you see a lot of millennials being very, very conscious about social impact. And also we are seeing a lot of the Gen Z saying, you know what, we care about where are we investing. So how are we bringing in nuances around blockchain? How are we bringing nuances around crypto? Yeah. The regulatory environment also plays a key role, because we've seen a lot of regulations and tax coming in to say, where's the money? Where can we find the money? Where are we taxing? So you become concerned around that, and the various taxes that we've seen coming in is taxes around inheritance tax, capital gains tax being introduced on some of those various investment instruments out there. So how do you manage that? And then also at the same time, the same thing we were speaking about earlier, ambition. How do you then tame your ambition or manage your ambition so that your ambition does not drive you to over-investing or over what we said, like allocating on one asset class specifically, without being cautious that you know what, there are other areas in which we can be able to diversify our wealth and investment. So one more critical question around intergenerational wealth before we move to what Stanbic has to offer in this space. I think for me is you are trying to maintain and build wealth, as families, as households, but at the same time you have family values. And here the point is, I don't want to turn my house into a PLC, where there's a board, my mom becomes the board chairman and I'm the CEO, and we have a CFO telling us, hey, don't do that. You still want to maintain that harmony within families, and you still, we are still wanting to build a wealth. We want this to last beyond us. Whoever comes after us should take over and run with it. But how do we preserve? How do we create that separation? Because I'm guessing you will be very anxious if I start seeing my younger sister as the CFO of the family now, and I'm the CEO who is being told, you're spending too much on this, or you're not doing this or that. How do we go about maintaining that? And like you said, the complexities keep getting added on. Marriages happen, divorces happen. The complexities get along, and you really want to preserve what a family unit is and what a family should be. But at the same time, you can't ignore these. How I know it's a delicate balancing act. How do you go about that? It's a delicate balance, but it goes back to what we were saying initially, is structures. You put up structures so that the business, the wealth is beyond one individual. And for anyone who, and we've seen this, a lot of the wealthy people, they task quite heavily their children to earn their space within the company. There's a series which I quite enjoy. I think I keep watching it on and off. It's called Succession. I don't know if you've heard about it, but it's a very interesting nuance where you watch now the jockey, who is this man trying to get his children, okay, who really deserves to take over this business. But if you look at the structure of that business in itself, the board that he has introduced is actually a diverse board where they can all be able to support the business at any point in time. You invite a board member who has legal expertise. You invite maybe someone who has financial expertise. Sometimes you even find people who are inviting someone who has marketing expertise, and they're completely independent of the family dynamics. So they're actually able to help that family navigate those dynamics. So an 18-year-old who has just come straight from high school will not be able to step in and now start calling the shots simply because daddy or mommy has said that this is what we need to do. So it goes back to structures and actually inviting that thought process, inviting experts like ourselves. I'm just throwing that in there. Both local expertise, and even for us, when we realize you need a bit of an international expertise, we also invite that because we have those capabilities to be able to help you navigate that. And it all goes back to structures. The structure is actually there to protect the business and to protect the legacy, and making sure that you get that right actually makes sure that you're actually able to deal with some of this. And the structures that I'm speaking about are protected from a legal perspective. So if ever all this lands in court, guess what? Because it's a separate entity from the individual, the Company Act comes into play. And some of those various acts are actually put there to actually protect some of the businesses in terms of how they're structured.
Now, interesting, I move it now to what Stanbic has to offer. I think we've set the stage, we set the context, Now there's an understanding of what wealth management is, diversity. Now, as we now start bringing in the experts and the asset classes and the various asset classes, the multi-currency strategies that we might deploy. If we look at Stanbic Bank Kenya, where do we start in terms of looking at, how you service your clients? Where do we start?
Okay, so fantastic question. Now, for Stanbic, our approach is usually very, very intentional and all-encompassing. For example, the customer value proposition that we have right now is built around touching the customer in the entire lifestyle. From that point in time when you start earning to the point where your ambitions are growing and all the way up to wealth. I think we are one of the businesses in the country where we actually have an in-country wealth management wealth management offering, where we actually manage customers with wealth of $1 million and above, which is under our wealth. So we cover the whole thing, all-encompassing. And what have we done? We've looked at the customer in their entire lifestyle. So if you look at our customer value proposition, it touches on banking easily. So what we had started off saying earlier, what is your traditional banking needs? You need a facility. I want to buy my first car. I want to buy my first home. Those we take care under banking easily. And then now, the more you grow wealth, the more your tastes improve. People don't grow wealth just because they want to sit on it. They also want to experience life differently. So we bring in an element around how do we help you live joyfully. So we switch on a lifestyle piece. And this is exciting because funding lifestyles, even as you're growing wealth, is a challenge. Some of these luxury things, these trips we want to travel first class, second class, some of these things we want to experience, they cost. So what we're offering our customer actually is able to switch on that piece for you from a lifestyle perspective, where we introduce for you exclusive benefits, where you're able to enjoy some of these lifestyle benefits without necessarily it being very strenuous on your resources. So we see some fantastic discounts coming in. We give customers, for example, you want to experience, you're not traveling business class, but you have your ticket. You can be able to access the lounges from a business class perspective. So you tend to experience different things. You're a golf player. I'm traveling to Dubai. Where else can I play golf? I don't have membership there. So instead of going and paying a full membership so that you can be able to pay, we're actually able to deliver this for you through some of the transaction instruments we give you. So if you look at our card, for example, the MasterCard World Elite card and the World card, it switches on these benefits for you from a travel perspective, from a peace of mind perspective, in the sense that if you use your card to buy your ticket, we automatically switch on travel insurance for you, so you don't have to spend money to get travel insurance separately.
Yeah.
So what does that do? It kind of enhances your lifestyle.
Yeah,
So
makes it easier.
Makes it
Much easier,
easier.
yeah.
So when it comes to the affluent space, we've also taken care of you. So we're helping you bank easily. We're helping you live joyfully because we've switched on a lifestyle piece. And then the whole element of speaking around expertise, we help you invest skillfully. Investments can be quite a jargon for most of us. So if you're a typical businessman, you are very good at, let's say, real estate, but now you're curious about, where then do I invest? I've gotten this big payoff, where do I invest?
Yeah.
And I want to grow, and let's go back from my 25 million, I want to make it 50, then 75.
Yeah.
Where then do I go? Come and speak to us as the experts, and we'll actually help you invest skillfully.
Mm-hmm.
And then finally, plan wisely. How do we help you plan wisely? So you want to plan for your children's education, you want to plan for your retirement. And us who are in the formal systems are lucky because our employer takes care of our health issues. But if you're in business, how do you plan for your health emergencies? Yeah, you have to do it yourself. How do I plan for my car? How do I plan even for my travel itself? Because sometimes I might want to get travel insurance outside of the card benefits that we've given you. So we are saying we're actually able to give you a very strong piece around planning wisely. So if you look at our approach is complete. So we are saying we're helping you bank easily, we're helping you invest skillfully, we're helping you to plan wisely, and then finally we're actually helping you to live joyfully, because guess what? You're not pursuing ambition for the sake of it. There are lifestyle elements you actually want to be able to introduce into your life, and that for the family. Now, interesting, if I can add another element. With the wealthy, you see a growing need around philanthropy. I always keep saying, in our context, in our culture, philanthropy could be just you choosing to pay your cousin's education, you choosing to pay my sister's brother, whatever. There's always a
charity here begins at home. Quite
charity begins at home, But we don't see that as philanthropy, but it is. Because when you have more, you're trying to figure out, how then can I help? Can I be able to do some of these philanthropic works? And some of the things that we actually have from a value proposition perspective is some of the benefits we bring to life, for example, through a UNICAF program, where if you're actually doing education plans or you're doing education payments through us, you can be able to get up to 75% discount on fees that you're paying towards some of these universities. And that's a big plus, because now we're helping you save.
You're saving, and you can add it to the rest, and it goes on.
Or you can add it to your lifestyle. So you actually have a more exciting life. So we actually believe we have one of the most unique propositions that is out there. And it's no wonder that we were actually recognized as the #1 private bank in Kenya by Global Finance last year. So it's a title we are holding for the whole of 2025. It's because we've been able to kind of step into all those spaces and actually assist our customers to be able to live a fully complete life.
Right. At the onset of the conversation, you did differentiate wealth management or affluent banking from traditional banking. And it's interesting, we're on Kimathi Street, Nation Center, right across is Stanbic Bank Kenya. So if today I walk in there, how will I tell the difference? Mostly we find the tellers, and you have to pick one of those vouchers and wait in line. What's the differentiation, when if I actually do what I just mentioned, walk across? How will I tell the difference that now this is wealth management, this is no longer my traditional banking, this is no longer me going and asking for your money market fund? We are trying to move beyond the specific products. How do I tell the difference?
And it's good. We do actually have a fantastic money market fund. The Kepha, I think we launched it sometime later last year, and it's doing quite well, giving some really good returns. So I encourage you to actually look at that. But the fact that you walked in, you're looking for a teller, means you're already banking with us. So let me throw that in. But when you walk in, we do have some of our investment advisors sitting at the front, and we're actually able to engage with you from the onset. Actually have needs-based conversations in terms of moving you, what type of account are you looking at? What is your objectives? And then we drive that conversation from there, and we're actually able to guide you. Now, because you brought in an whole element around infrastructure, how we structure our private banking business or even our wealth business is there's a lot of flexibility and convenience, because we can bring the banking to you So if you're here at Nation Center and you're like, you know what, I have too many podcasts, I don't have time.
Yeah.
You call us, someone will come to you. So in between your lunch break or something, we can have a conversation.
So the same way we do see, I think we've seen a lot of insurance agents. I know now banking is so I can get my bank to come to me.
Yes.
That's what you mean.
Yes.
Great.
That's the flexibility that is there with banking. You know why? Because we are trying to fit into your life. So if you have a busy schedule like yourself, we'll say, oh, you know what? Well, let's go see him in between lunch and let's have a conversation. That's one. The second way is even on phone. Like I think the technology has really evolved us. We can do various ways in which we can be able to engage you to make sure that we get to understand what it is you're looking for.
Yeah.
And also see what point in life are you and where are you going, looking to go to next. And I think, like I said earlier, we are all about how do we make your ambition meet affluence.
Yeah.
Yes.
I think as we look now to end up the conversation, it's making our portfolios future-proof to whatever might come.
Yes.
What strategies are going in around that? I know it's very hard to call the future. There are no crystal balls here. But how do we future-proof? What are some of the strategies, even as we think about wealth management and lasting? How do we still ensure that we future-proofed a lot of what we have? Is it the same diversification, perhaps? So hard, it's always said lightning hardly strikes the same place twice. So then just make sure you're in so many places, because once it's hit, then you can have reprieve from another side of your portfolio. How do we go about future-proofing that?
There's so many ways, and I like that question, Kepha, because you mentioned diversification. You future-proof yourself, because depending on your risk appetite and your objectives, we're actually able to structure for you a very comfortable portfolio of investments whereby you can be able to kind of cushion yourself against some of these uncertainties. That's one. The other way is through insurance. We do have fantastic insurance products which can be able to kind of protect, because insurance is usually mitigating against potential risks. Yeah, so if you look at the reward benefit of insurance vis-a-vis the cost, it's usually very, very significant. I think one of my colleagues, a fantastic gentleman, the one who looks after insurance, always tells me the thing about insurance is when you need it and you don't have it, it's painful.
Yeah.
But now when you don't have it, and then you need, it's the same thing basically. If you don't have it and then you need it, it's painful. So it's always good to have it and don't need it, as opposed to needing it and you don't have it. So insurance becomes a very critical piece for us, and we've structured it very well under our Plan Wisely proposition. And then what's the other thing I would say? Advisory. Take advantage of the expertise and advisory which is there. And some of the advice that we give our customers as part of you just banking with us, Kepha, is advice that if you step away from the banking structure, you'd actually be paying quite significantly to get that expertise. So take advantage of that. Sometimes people think, I can't have this conversation with my bank, but guess what? There's no conversation that is touching money that we're actually not able to help you navigate. And then if you look at some of the tools that we actually have available, like our Financial Fitness Academy, I think we are one of the banks who actually have a Financial Fitness Academy, and it comes in the form of an app, or even in the form of on a web-based, where we take you through a course where you actually know how do I manage my money, and just allowing us to walk that journey with you, from ambition, and allow me to say from ambition into affluence. And we have seen it happening, and we're not talking from the blue. We actually have customers that we have walked through the journey. I've been in banking, 17 plus years, and they're customers who I know. I know customers who I've been able to walk with them the journey to a point where they're wealthy, and then you become a trusted advisor. So a customer is like, okay, I would like to buy a property in the UK because my daughter is going there.
Yeah.
I'd like to do this. What is available to me? What kind of structures do I have in place?
Yeah.
And then also some of those tax optimization opportunities, which jurisdictions are favorable? Where then do we see Kenya and some of the other countries actually having tax alliances to kind of cushion you through this? So taking advantage of the expertise which is existing, I think is also a big plus. And also at the same time, like I said, engage us, and we can actually help you to be able to also add some sweetness to your lifestyle.
All right.
It doesn't have to be very, very, very expensive.
Yeah.
But,
All right. A final one from me. looking forward now, we're still in the first quarter, so this is the time we tend to pull our binoculars and try see what's coming.
Yeah.
You're the expert in this space. What are some of the trends do you see coming? What might shape the trends and future? You did mention the demographic we have, quite young, quite ambition led. We're still seeing growth as much as we do have the other concerns that we do. We don't have to go through the whole list of them, but we do know first there's an ambition. I think what I get also from many of my friends is we are trying to move from the people, some of my friends, luckily not myself, we are victims of the black tax, having to support the older people,
the philanthropy.
the philanthropy you spoke about. We are trying to move from that into a place where now we are living generational wealth. When I come up to retirement, maybe 60, 65 years, I'll be thinking of what am I leaving those that have been taken care of, and not what will they get to me once once they're in a working age. So with that can be maybe perhaps one of the trends you are seeing. But perhaps what more, you have the binoculars here. So if you would sum it up for us, what more is coming? What's the space looking like? What's exciting in that space to watch out for?
Okay, so the trends we are seeing outside of what you've mentioned, we're seeing a trend around our customers wanting to get more into alternative investments. Maybe just to give a bit of context, when you talk about traditional investments and alternative investments, traditional investments are usually regulated, and they are more liquid. You can easily access that. And the return tends to be moderate, sometimes high. Traditional investments, you're talking about stocks, we're talking about bonds, we're talking about traditional fixed deposit that you get from an account. We're talking about some of the government instruments that we're seeing out there, treasury bills, etc. So very well regulated. You'll be able to get a good return. If you want, at any point in time, you want your money, within a day or two, you can be able to get that out. Now, we're seeing a trend towards alternative investments where you're getting customers who are like, okay, let's go back to that magic number, 25 million. This 25 million, I want it to become 500 million in the next 1 year or 2 years. So you see an appetite for risk. So you see customers saying, I want to invest in this tech company which is coming up. So it's private equities. You're like, because there's a lot of fantastic ideas. There are Kenyans out here who have fantastic ideas. And you find others, the ones who are wealthy, are like, okay, I want to do a bit of work with some of these private equities. Again, the key thing is it's complex because it's not regulated, but now that's where you go in with your lawyers and you're able to structure in terms of how do I buy equity in some of these private companies. And that's where you're seeing some fantastic growth, especially when the businesses take off. And then we're seeing customers who are like, okay, I want to move away from, I have enough instruments, I want to do a bit of commodities, we're going into gold, silver. Okay, so the other trend we're seeing is a very strong play around social impact, and it's interesting, and I think we're seeing it more with the millennials and some of the younger Gen Zs who are actually making it. They're thinking about how do I go back into social impact, and then we are seeing more and more of the white-collared, what you would actually call white-collared Kenyans, actually wanting to support agribusiness. So you're seeing a lot of investments into the agribusiness space. We're seeing a lot of course, tech trends continues to be there. We're seeing a trend around AI. We're seeing some people wanting to build their portfolios using AI. So you actually want to be able to key into a system and actually be able to invest that. We're seeing a very strong play around blockchain. We're seeing a play around crypto, especially with the younger generation. And we're talking about people who are pushing significant wealth. What are some of the other trends you're seeing? The growth of wealth in women. Yes, women are controlling more and more wealth, which is a very good story. And we do have a fantastic women banking proposition in the bank to support that. And that's not a local trend only. I think we're also seeing from a global perspective, more and more women are stepping in to control wealth. But overall, the trend we're seeing is our clients and people are becoming more informed. People are more cautious because they know they've worked very hard to build their wealth. We're saying people are actually more aware and they're saying, you know what, I want to be able to do that. So some of those cases we're talking about, cases going to court for the court to decide how this wealth can be split, we're seeing a shift away from that. Kenyans are smarter now. They want to build structures. We're seeing even someone who's just starting out saying, you know what, I want to separate this from my personal wealth. I want to separate this from wealth. So we are seeing that trend coming through in a very strong way. So it's very exciting. It's
All
very
right.
exciting and
All right.
optimistic. Yeah.
All right, Doreen. Thanks a lot for dropping by our podcast today.
Yeah.
We do appreciate the insights, and I think I've gotten to learn a lot around wealth management, the trends, and even how to set up myself, as an ambitious person trying to get there. So we appreciate that. So that has been Doreen Ratemo, head of Affluent Banking for Stanbic Bank Kenya. And that has been another episode of Make Money, the podcast. Hope you've learned quite a lot. And if you want to get started at Stanbic Bank, of course, you can just walk in. You've gotten to learn about the investment advisors that they do have, and get to do more and build your wealth and build your own legacy. Until next time, my name is Kepha Muiruri, and that has been Make Money.